There has not been any serious inflation pressure in the US, Europe, or Japan for over 25 years. Unemployment has gone up and down. Equity markets have had bull runs with interludes of major bear markets. Interest rates have risen and fallen. Since 1994, the US inflation rate has averaged around 2%, with only small swings above and below that mean. Inflation has been a little lower in Europe and essentially non-existent in Japan. The inflation conundrum has been especially highlighted in the last decade due to major central banks shifting to the era of quantitative easing. The Great Recession of 2008-2009 was the catalyst for a vast expansion of the balance sheets of the US Federal Reserve, the European Central Bank, and the Bank of Japan. They all adopted quantitative easing. During the pandemic of 2020, all three of these central banks have pushed to new highs in terms of assets as a percent of nominal GDP. And yet there is still no serious inflation pressure to be seen. In the fourth quarter of 2020, compared to 1 year ago, core inflation is running a little less than 2% in the US, a little lower in Europe and Japan. Not only is there no inflation pressure, government bonds no longer have any premium over the prevailing inflation rate. The demise of the inflation premium has been helped in no small way by the massive purchases of government bonds by major central banks. But the underlying reason has been that market participants simply no longer fear future inflation. A number of theories have been put forward as to why no inflation in the major countries has emerged, despite the active balance sheet expansion of central banks designed to create inflation pressure. Reasons range from globalization to comparison shopping on the internet, and they've all been put forward, but they don't really work. To get to the heart of the matter, though, our perspective is that one has to analyze the famous assertion by the monetarist economist, Professor Milton Friedman, who stated that inflation is always and everywhere a monetary phenomenon. The real challenge for monetarism as a theory of inflation is that we can no longer associate any quantitative measure of the money supply with the spending activity of consumers. Put another way, we no longer know what money is in the sense of shedding light on consumer buying power. In the 1950s and 60s, Professor Friedman knew exactly what money was. Money was the cash in your wallet and the funds in your bank checking account, a measure known as M1. Over the decades, financial innovation has allowed consumers to buy goods and services using funds in their asset management accounts, with credit cards, using their phones, etc. What this has meant is that if one knows the quantity of M1, or M2, or M3, or M whatever, one knows nothing about consumer spending. Our view is the key to inflation is supply and demand. The supply of goods and services can shrink or grow over time. Yet we generally have a reasonably good estimate of supply, that is GDP, at the aggregated economy level. Understanding demand is the critical part, and specifically recognizing what could cause a surge in the demand for goods and services that might overwhelm supply and lead to inflation. At this point, it's useful to go back in time and remember the major inflation episodes in the US, UK, and Europe. Most of them were associated with wars, and wars are generally fought by governments issuing massive amounts of debt to fund a huge appetite for military equipment and personnel. And this can lead, at least for a time, to a significant imbalance in the demand and supply. This raises the question of whether the war on COVID-19 will bring inflation down the road. This pandemic is being fought with government spending, the funds coming from new debt issuance and central banks actively buying large amounts of the government debt. This is a backdoor to modern monetary theory, the fusion of fiscal and monetary policy. Over the next few years, as the pandemic hopefully wanes and economies rebound, we could learn a lot about how inflation is created, or not. I'm Blue Putnam, Chief Economist, CME Group.